So, welcome to this edition of Level Up Live. West is out goofing off somewhere, or actually, he's traveling for work, but I'm going to accuse him of goofing off, though. When we get to my favorite piece of the discussion, we'll find out where I am, and I might be guilty of the same thing, more or less. To start with, though, we always want everybody and invite everybody to join in as Ruth and I are talking today. You're going to want to, if you have questions put them in the comments. If you're watching it on the replay, go ahead and put them in the comments anyway, because we'll see them and we'll try to get them and get you in touch with Ruth to find an answer for them. So to start with, my favorite piece is, where are you watching from? So Ruth, where are you joining us from today?
I'm joining us from Atlanta, Georgia.
From Atlanta, Georgia.
Although it's not so hot.
Yes, it's a little warmer where I am. And for those of you that know me, I am not always in my home office. And so today I am sitting on the patio of my resort room at the club in Barbados. I'm about 150 feet from some of the most beautiful water you'll ever see. And we will I'll be out there later today, probably playing in the water. So let me know where you're watching from today in the comments. And as we get started, while we're waiting on people to comment, let me ask you this question, Ruth. Who is Ruth King? A little of your background and what you do.
My background and my reason for being on this planet is to give business owners and managers and people in general the processes and tools to get and stay profitable, build wealth, achieve the goals that you want to achieve, and give back. That's basically what I do. So okay. A lot of it's, financial oriented, put together the numbers so that you can figure out where you want to go. And the numbers are just a tool. The money is just a tool to get where you want to go. So that's really what you need.
Yeah. I used to use the analogy, money's how we keep score on how we're doing.
Yeah, exactly.
Before I started my business, we'll come back to a piece of that later in the show. But I used to think $1 million was a lot of money.
It's not.
And then when I had a business, I realized it's just numbers.
Yeah.
It's just numbers. So we have some people. We have Michael Cousins from Tampa, Florida. And Michael, you live pretty close to my home office. I live over in Lake Wales, which is probably about 60 miles from Tampa. And Greg is with us. He is in Fort Myers, 82. I got you beat. It's about 84 or 86 here, Greg. So if I was home, it might not be that warm. But anyway, very good. Let's see. And Michael said he is in Tampa, Florida. Very good. So nice to have you guys with us. And as we go on, like I said, anybody has questions for Ruth, please feel free to put them in the chat. So let me ask this question first. How should we think about profit? You and I talked a little bit about this, but for the audience, I think too many times we look at profit in the wrong way, and I think you agree with that.
Yeah, I mean, and profit is basically, if you want the definition of profit, it's just revenue minus expense. So, if you have more revenue and don't have as much expense as revenue, then guess what? You got a profit. If you have more expense than revenue, you have a loss. I mean, that the numbers is it, but really, you really want to look at profit in terms of what is the unit of revenue. So for example, in the copier industry, I mean, the copier piece of it, the box, so to speak, is there. And you're looking at it, okay, you sold a copier, you sold, a product. It's really the recurring revenue behind the product that gives you the net profit, more so than the box itself. So for example, what is your net profit per toner cartridge that you sell? What is the net profit per other supplies that you sell? What is the net profit for every billable hour that your technicians go out on when they have to service a copier? So you have three ways of looking at net profit. You have a way to look at it from a service perspective, i.e. for every billable hour, how much drops to the bottom line. You have a way of looking at it for the supply side for every, toner cartridge, or just break it down into the different supplies. For every one you sell, how much net profit drops to the bottom line. So for example, if you're, let's take the guy who's out servicing a copier. If he bills 1 hour, obviously there's his cost, there's the part cost, there's the overhead cost, and for what actually drops to the bottom line with respect to net profit. And that's the way I'd look at it. If you don't like your net profit per hour or net profit per supply sold, or something like that, fix it. Get it where you want it to be. So it might mean that you have to sell more copiers to get where you are with the recurring revenue. It might mean you have to sell more copiers or talk to people about their copier for maintenance or whatever else it is, so that you can get the techs out there to generate the billable hours. I mean, there's lots of things once you know what those numbers are, and then you can figure it out. So that's a long answer to your question.
Okay, well, and it's interesting because it's one of the things that I focus on. And in the copier industry, the great majority of the, let's say, office equipment that gets placed actually goes out on a per click basis. And that's the one point I make to service managers when I teach them is that you always have to think about everything in cost per click. In other words, what you really sell, and that includes the service and the toner, is that click. And so how do we make sure that we are as efficient as possible in servicing the equipment? How do we avoid making unnecessary trips? What are all of the factors that affect our cost per copy? Because the price is usually driven way too often by the market or the sales team. So as a service manager, if you want to get your profitability where it needs to, you're always thinking about it. And I think that that's a mistake that senior management may not always think about in a business. Is what are we doing that's affecting the cost per click, and what are we doing that's affecting the revenue per click, so we can get to those margins?
Yeah.
Does that make sense?
Yeah, and the thing is, you got to go down. What's our net profit per click? What's our net profit for a page? That's where you really need to do. It's not the revenue side, it's the net side, because you could have great revenues but more cost than revenue, and what good is it?
Yeah, or you could have a very efficiency service department, and the sales guys give away the service, and so you don't have the revenue to pay for it. And that's a really, actually, we're gonna talk about this for just a second, because that's a really interesting piece of the equation. I was called into a meeting with a operations manager at a copier dealership when I was still working for the manufacturer, and they were talking about that the parts cost per click is getting pretty high, and and they were measuring it as a percentage of revenue. So the target's typically 15 to 17%, and had been around 14. Now they were creeping up to 17. And so the service manager and I had talked about it, and he said he didn't see any unnecessary use of parts. So we went in and looked at the revenue side. And what had happened is, when we measured the cost of parts per click, it had actually gone down over the last year. But what had happened to skew the ratio was they had gone out and discounted service to get a bunch of new clients. But here the service manager is getting his foot held to the fire because that percentage was wrong, but in reality, the cost per click was actually improved.
Yeah, exactly. So, you have to look at the percentages don't really matter, because, you think about it, you have a 10% net profit, that automatically gets transferred in your head to dollars, or translated in your heads to dollars. And, you can't take a percentage to the bank. You just can't. You have to know what your net profit dollar is. And for everything you do, what is your net profit dollar? And if you don't like it, then guess what? You need to change some things so that you can get where you need to be, so that everything you do is profitable. And there's
exactly. Okay, so we have a couple of comments here. So Michael was claiming that 74 was here, so we had us beat. Well, if you're going to get in the water like I am today, 84 is not bad. We have another LinkedIn user. So hiring right or wrong individuals, especially sales reps, they need creativity that aligns with service. Oh, I don't know who it is on LinkedIn that said that, but you are now my favorite fan, because that is so true. And then we got.
Yeah. Wait, let me comment on that. Wait, before you go to that one, let me comment on that. If everybody's paid on revenue, then you're in a situation where they don't care what the price is. If they're paid on net profit, they care about what the price is. So however you're compensating your sales reps, yeah, they need creativity, but they also need to understand what the costs are, and they also need to realize that they're not getting paid if nobody wins, i.e., they sell a losing deal. That's really
Oh,
what has to happen.
I love that so much too, Ruth, because and that's one of the points I make is that in the copier industry, the compensation model has been broken pretty much across the board, is because nobody gets really paid on profitability. Sales guys get paid probably on the profitability of the deal, but if they can load all of the profit into the machine and take all the profit out of the aftermarket, they do well and they're happy. But the service guy's not ever going to meet his goals. And I think it's, I and Wes and I are going to have an upcoming webinar on this.
Yeah.
But the key has got to be is get everybody focused on doing what's best for the company, and we pay them to do what's best for the company. If
Yeah.
we do that, then we're going to have success.
Everybody has success in that point, but everybody has to understand where cost is and what cost is. And, it's not revenue, it's net. It really is and truly is net. And if everybody understands that and starts, as you say, changing the model to looking at net, then things change. It won't be sales reps who are selling, I call it salesperson price versus, or salesperson, timing, salesperson price versus, real cost. And if they are getting paid on revenue, then forget it. They don't care what the cost is.
Exactly. There's another good comment here. So let me find it. I just scrolled past it. So I love this. So let's post this one first. So I'm going to say death of the copy. I'm going to say yes. They measure down to it, but they don't look at it from the right perspective.
Yeah.
And again, I deal with service managers from small companies. I've had vice presidents of service sit in my class, for major corporations. And the interesting thing is, none of them had ever really been walked through exactly how to look at the financial profit and the components that go into it. We inherited as an industry some metrics. The one that makes me absolutely insane is calls per day, because that rewards activity, but it doesn't reward efficiency. I took over as a service manager in a copier dealership where the guys were doing 9 calls a day, 10 calls a day, and they were going to do 8 of those tomorrow. And so they did lots of calls per day. They are also bonus for not putting parts in, which fed the more calls piece of it. And the company wondered why they weren't making profit, but they had the carrot in the wrong place. They were paying for behaviors that they thought were smart, but in reality, they were paying for behaviors that literally damaged the company, its reputation, and its profitability.
Yeah. You have to understand where your net profit comes from. It's not calls per day. It's profitable sales per day.
Yeah, and being as efficient as possible in service, putting the right part at the right time. And I tell them that if there's one metric in service that you measure, it is the number of copies made between service calls, because the labor is the biggest piece of it. So the bigger that number is, the more you're dividing that cost of the call by more copies. The price is going down and down and down, and that's where everybody should focus. But I'll get off of that. We have a comment here, and you probably agree with this. So the bookkeeper should be taken extremely seriously.
Yeah, I agree.
And we're going to talk a little bit. Ruth wrote a book that I had talked to her about in the past, and we'll talk a little bit about it. And she's going to share some things that will help. And in not only the bookkeeper, but the owner there's some things that he needs to be looking at.
Yeah.
Okay, so we got one more here.
Yeah. What do you think about adding a cost for sales acquisition? Yeah, I mean, you have to figure out how much, if you're paying your sales reps, whether or not they sell anything, there's definitely a cost for sales acquisition. And even if you're paying them based on commission and nothing, no base or anything along those lines, you still have cell phones and some costs with respect to every single sale. So what I would do in this particular case is, take your best sales rep and take your worst sales rep. And whatever the costs are for the best sales rep, add them together. And then how many sales did your best sales rep do, and divide that into his total cost. And that's your cost of acquisition per whatever, per sale, and take your worst sales rep and divide the numbers too, and your cost of acquisition. I'd use the worst one to be conservative rather than the best one. That's how I would do it.
Yeah, it's interesting. We're talking about cost of acquisition. I do the same thing with cost of hiring,
Yeah,
because I've heard people make the statement. It was all I could do not to cut loose on this owner, but he said technicians are a dime a dozen. So if somebody wanted to raise. In fact, I'll go back to a story, and I can share this one because I worked in the dealership. I had a guy that wanted a 10 cent an hour raise, because if he didn't get it, somebody else had offered him 10 cents an hour more. And my owner says, I'm not paying 10 cents an hour more. So they let this guy walk out the door. So now if we do the math, 2,080 hours, so 10 cents an hour, that's $208 a year.
yeah,
And this is what started me on figuring out the cost of training. So all said and done, by the time I'd hired and trained a technician, they were $60,000 invested in them. So I'm like, how long does it take to earn back at saving that $208 a year to earn back the $60,000 they let walk?
yeah. Penny wise, pound foolish.
Oh yeah, absolutely. But so let's see. So our LinkedIn user is Ariana Joy. Thanks for joining us. Mike, we got a lot of comments today. He said, service revenue minus service expense equals service profits. Oh yes, I believe that 100%, Michael. You and I are on the same page. And then
Complementary matter. Yeah.
And Ariana's back. She said, reps are majority males, bookkeepers are majority female. Money driven, greedy, do not take direction well from females. And she said she thought you had experience in this.
I don't care. If I'm hired to do a job, I'm going to do the job, and we'll figure out how to work with the egocentric guys.
Yeah.
But that's really the reality of it. If you go through life saying guys won't do this, guess what? If you have in your head they won't take direction, then guess what? They won't take direction. You need to have a conversation with them that basically says, okay, we're both trying to establish something here, and we're both trying to win. How do we both win? I need input from you, and you need input from me. So are we going to do this the right way, or are you going to do it how else are we going to do it? And have that conversation.
Exactly. That is again, is so critical to all of this. Let's go back to the book that you and I talked about before. Not your new one coming. We'll come to that again in a minute. But you shared in a previous podcast with me some things that owners could look at very quickly and easy to let's say make their financial data more understandable.
Yeah, that book is The Courage to Be Profitable. It's written in English rather than accounting babble. It's what a P&L is, what a balance sheet is, how to look at different ratios, how to really understand what your financial statements are telling you. That's that one, not the new one coming out.
Yeah, no, but I thought that it was interesting because in that discussion we talked about, and you showed how people could very quickly. And so I'm not getting commission on Ruth's books, but I would, for all of the owners that are listening, I would encourage you to get that book, because she walks you through some very quick and easy ways to look at your P&L and look at your financials, and to get a I don't know, how would you describe it? I would say a good snapshot of where the business really is.
Yeah, absolutely. And the book is some things you should do every week, some things that you should do every month. And, the reality of it is you can choose to do it or choose not to. Most people don't pay attention until they start getting in trouble, unfortunately. They think, they go, I got cash in the bank, I'm good. Well, that cash in the bank, as you well know, may not be helping you with your profitability and growth. So, yeah.
Yeah, I am. We'll talk about that in a minute. I learned the hard way a lot of these lessons. When all of a sudden there's no money in the bank, it doesn't really matter how profitable you are. All that matters is that there's payroll coming, and you've got to find cash. But like I said, we'll come back to that. Okay, so let me actually talked about that. So let's talk a little bit about your new book.
All right. So the new book is called 101 Dumb Financial Mistakes That Business Owners Make and How to Avoid Them, excuse me. And you have one of the stories in the book, because you and I talked about that before we got on the air. And that one of the stories in the book is you can grow yourself out of business by, running out of cash. So Ken, you want to tell your story?
Well, I came into the industry from being an air traffic controller. I didn't know anything about the industry. And as I was starting to grow, I needed to acquire some things. And I had a small pool of cash. And my thinking was always focused on profit, not on cash management. And so rather than leasing things that I could have leased easily,
Mm-hmm.
I paid cash for a lot of things to be more profitable. And then, as I said, when the bank account's almost empty and it's payroll, you have to start to make dumb decisions to get the cash back in where you can pay people.
Yeah. All right. Here's the rule of thumb. Okay. So you take current assets minus current liabilities, which is your working capital. Current assets are things that are cash or turned into cash within a year. Current liabilities are things that are due within a year. So you subtract the two, and that's your working capital. And then you annualize sales, which means that you take your year-to-date sales and there. So like if you're in month 12 and it's, you have your sales for the year, but if you're in month 5, you take your year-to-date sales through month 5 times 12 divided by 5. So, I mean, you have to annualize your sales. Okay. And then you divide the two numbers. If it's greater than 10, guess what? You're growing too fast.
Okay.
And that's just really the rule of thumb. And that's part of it. And you need to do that every month. Because if you were, 4, then 5, then 6, then 7, then 8, then 9, then all of a sudden you're at 11, warning bells should be going off in your head. I mean, we've been growing like this. Do we have enough cash to survive? And that's really the answer to that question. So,
Yeah, and again, it's one of those things I wished I'd known, among a lot of other things I wished I'd known when I started my business. And that's, I love the fact that you've got a big book out there that will help people that are thinking about starting a business, but also help people that are in business.
yeah,
I thought about it, and I, from service managers to, quick and dirty ways, I tell them, think about this. If you're paying you're paying net 30 for all of the things you buy, and you're getting paid net 60 on everything you sell. Okay, if you outgrow that, you just grow a little bit, you can be where you don't have the cash to
that's right.
buy the stuff that you need to keep up to fund the growth.
Yeah. And payroll's not even net 30.
Yeah, payrolls today. Yes, I literally,
Every
okay,
week.
and I'll tell this story on myself. I had to go out to a person that had a demo copier that I knew was really interested in it but hadn't committed to it. And I sold it to them at my cost for a check that day so that I could have enough money to cover payroll. And my employees never failed to get paid. Now, I had a drawer full of checks that I couldn't cash at times,
Sure.
but everybody that in the company got paid. But it's those kinds of things that you put yourself in a bind, and it can literally be the death of your company if you don't find some better solutions.
Yeah. Cash flow is king. Positive cash
Yeah,
flow is king.
yeah. Okay, and so we have another question. Do you provide a primer on accounting concepts for selling professionals? That's a great question.
You can read the Courage to be Profitable. It really and truly, it's understandable, and you'll have to get the cost piece of it from the company you work for, so that you get the cost piece of it. But you can truly understand what a P&L on the balance sheet actually is. So they'll have to give you certain pieces of it, but you can actually do it once you get those pieces and figure out what revenue and expenses.
And I'm going to say this, and again, this is I guess primarily directed at owners and the people that have the control of the information. But I am a firm believer that transparency with your management team is vital. And then I think that it is their obligation as managers. So the sales manager or the service manager, and I tell them to teach, the service guys, I tell them to teach their technicians to think about their territory, the machines they support, as their business. and then help them understand how to make good business decisions. Because once everybody in the company knows how to make a good business decision and understands the factors, what happens is a lot of the management starts to go away, and it devolves into a much more leadership based company.
Absolutely. The way I normally do bonuses is that everybody in the company gets a piece of the bottom line. It makes them totally focused on profitability. Obviously, profitably taking care of your customers because they're the ones who write your paychecks. However, that once everybody understands what it takes to be profitable, sales reps, internal people, it doesn't matter. Then everybody gets shares in a piece of that bottom line that everybody helped create. And so that's essentially where that comes from.
Yeah, and if I would say this, that if I was starting a company today, I think all of my employees would be treated kind of like salespeople, which they're not paid by the hour, they're paid on the results, and based on what what their piece of the company is, they get paid on the results of what they accomplish.
Yeah.
Because now everybody becomes focused on doing what's right for the company and focused. And I saw this. I was working with a dealer that was an ESOP, and it was really interesting because I was riding with a service manager, and we had not gotten in the express lane, and there was a little tiny curb between where we were stuck and where the express lane was, where there was nobody. And I said, well, why don't you just jump the curb and then we can get on about it and get our stuff done. And he looked at me and he said, this truck is part mine, and I don't take my truck across curbs like that.
I wouldn't either.
But the point is he thought about it like it was his truck.
Yeah.
And in that company, because they were an ESOP, and I actually have a student now that in my class that they're setting their company up as an ESOP, and they are completely transparent. And when everybody can see the bottom line and think about what they're doing, and so whether you do it in the sense of an ESOP where everybody owns a share, or you just do it as a bonus structure where everybody gets a piece of what's accomplished, then again you start to have that carrot where everybody's pulling in the direction that's going to make the company profitable. They're not pulling. We remove the is it dichotomy? Is that the right word? Between what's good for me as an individual versus what's good for the company.
Yeah, exactly. Everybody wins or everybody loses.
Yeah, and again, then people, and it's amazing what if you give people the motivation and the education so they know how to be profitable and how to do what's right. It's amazing what a company can accomplish. I tell them, I said, put a carrot out there, make it a big carrot, put it in the direction you want to go, and then get out of the way.
That's right.
Otherwise, they'll run over you.
Yep, let them take it. Absolutely.
Okay, so any more? Give everybody one more chance. Okay, here's another question here.
Having the salesperson have the ability to help have prospects determine a profit equation. Yeah, if I'm going to invest $100, what's my return? Sure. Absolutely. Here's my profit. This is what it's going to do for me. It's like, here's your benefits. Yeah, I would do that. Absolutely.
Well, and I think, and I'm going to say this too along those lines, is I think that is a great way to think about it, is because if your sales reps can explain, can say, take the competition's proposal and your proposal and walk through what the ROI on those investments would be and help the customer to look at it. Because a good example, back in the day, Xerox would give you free supplies for 3 years, based on you had to have their maintenance agreement.
Yeah, obviously.
And so I would walk into a customer and I'd show them what that was going to cost them versus what would happen if I did their recharged cartridges and stuff, and show them the ROI of doing business with me versus doing business with Xerox.
Yeah.
Okay, some more we got, man. Oh, we got somebody that doesn't get posted.
Okay.
Every once in a while you get a troll that finds you.
That's fine.
So our LinkedIn user said exact guidance, Ms. Ruth.
I'm not sure what you mean by exact guidance. Do a P&L.
Yeah.
Revenues minus expenses equal profit. Figure out what the revenue needs to be for you to get whatever net profit you want.
I think she was talking about your comment about not letting the guys run over you.
Yeah, I don't. Listen, I'm a chemical engineer by training. I grew up with guys. I deal with guys all the time. Doesn't bother me. Shouldn't bother you either.
Yeah, she says she gets gun shy.
Yeah.
And that can be the culture. But I would, again,
Figure out,
until you start.
communicate. Figure out, say, look, I need your help. This is what I'm feeling, or this is what I'm sensing. This is what needs
And
to happen.
I would say, and put it in the perspective of what's in it for them. In other words,
Yeah.
if you let me help you, I'll make you more profitable, and in the long run, make you earn more money.
Yeah.
That's my goal. Is I'm trying to help the company be profitable. So if you'll work with me, I can help you. If you don't work with me, you're on your own.
Yeah, exactly. And there'll be some idiots who are going to be on their own. Well,
So I don't know the answer. This is probably your area more than mine there, Ruth.
if they don't care, they're going to quit. If you haven't created a good culture, they're going to quit. If they don't know how to take care of the customer, they're going to quit. If they don't see a reason why they should be there every day, they're going to quit. You got to create the culture and communicate and show them where they are. They're going to.
I think so too. And to your comment there, Wes and I have talked, a couple times on the show, and he and I are both fans. And for people that are interested, reach out to Wes or I, and we can talk to you about this. But I am a huge fan for a sales rep to have an annuity-based income stream.
Mm-hmm.
To qualify for the annuity, it requires a certain level of net new business. Because right now in the copier industry, one of the ways that a lot of equipment gets sold is they upgrade the existing customers, which does nothing for the overall growth of the company. It just makes the sales guy money and it makes the manufacturer money. It may make the dealer a little tiny blip in their cash, but usually they give up discounting service, give up service to get it, so that obliterates any profit they got. But once a sales rep, again, goes back to the carrot, and I'll get your opinion on this in just a second, Ruth, is if a sales rep gets a commission on the service revenue of all the equipment they've sold, and that number can be really big, and they get a small commission on that, a small percentage of it. What happens is every time they add a net new customer, that book of business is going to grow. That revenue stream to them is going to grow. And you think about, and I use this as an analogy. How often has your insurance company your insurance sales rep for life insurance changed companies, Ruth?
Never.
Why?
Because he has an annuity off of me.
So if you want to keep your sales reps and the good ones, and you want to motivate them to do what they need to do, give them an annuity, make it contingent on meeting their targets for net new business and meeting the profitability. Because again, now we're talking about the service revenue, what they're getting paid on for service actually is not revenue, but profitability. So they're going to be motivated to make sure that stream of annuity revenue is as profitable as possible.
Yeah.
And again, now they're going to stay, the ones that don't stay are people you don't want anyway, in my opinion.
Yeah, probably. So cool.
So you think that's a good thought?
That's a great thought.
Okay, well, we're coming up on the end. Actually, we're over a half an hour. We try to keep it to about a half an hour. Ruth, it has been a real treat having you on the show again. To all of our audience, thanks for joining. Thanks for all the... Okay, we got another one here.
Yeah, but also asking for referrals. Who else have you talked to about your copier, and find out who it is and get a referral.
Okay, and Death of the Copier, come and reach out to me on email, Ken at 22nd Century Management. I'll walk you through the process that actually, I'm not saying that the service team re-ups the existing leases, but I am saying that we want those leases as long as possible and let them auto renew month to month. I don't like auto renewal for a year, but just let them renew auto month to month, because about year 3 through about year 6 or 7 are the highest profit, because you're getting escalations in the service revenue, and about year 3 is when the techs and the car stock and everything is fine-tuned for that product. And because most volumes are so low on equipment, the end result is they'll go 6 or 7 years very easily. And so the end result is that revenue stream is still going to the sales rep. It's just you're not up upgrading the equipment quite as often. It's also a great way to place the used equipment. Yeah, it's been fun. Thanks, everybody. And we will see. I won't be here next week. I'll be on a ship, or actually, I'll be ashore filming shore excursions. But West will be back. He's got Larry Levine selling from the heart. Pretty much everybody in the industry knows Larry. So that should be a great show as well. And I'll be back in 2 weeks. We'll see everybody. Thanks.
Bye.